Hey, what's up, everybody? Welcome to the live stream. If you're new here, well, welcome. And if you've been here for a while, thanks for coming back and thanks for hanging out with me on the actual stream. Today, what I wanted to talk about was a potential 30% pullback in the market, and not specifically like, can it happen? Will it happen? Like, I by all means, I can't predict the market. How am I going to handle if there was a 30% pullback? Or how I've already poised myself to be able to handle a 30% pullback in the market. So this is an S&P 500 ETF trust fund right here. So as you can tell, moving from January 26th-ish, we had pretty much an all-time high to dropping down to about 255. So that would be probably roughly from there about a 10-13% pullback. So a lot of people are saying that we might even have a 30% pullback from way up here. So 30% of that probably would actually put you around the 200 or so range. But how am I handling this if this were to happen? If a correction of 30% was to happen in the market, what would I do? Would I be doing something different than what I'm doing now? And actually, I have already poised myself going into 2018 to be able to handle a bigger correction than what we've already experienced. And basically what I have done on a lot of my different investing apps, for instance, specifically on Robinhood, which is the app that I got pulled up right now, I've got about a quarter to a third of my account sitting liquid cash right now. I'll go ahead and I should be able to show you, maybe if I go to buy an actual stock. I have about $420 in buying power, and my account right now sits at around $1,350. So that's quite a bit. That's almost, like I was saying, that's almost a third of my account in liquid cash right now. So it's not even invested in the market. So if we had a 30% pullback, that money would stay exactly the same, and then I could throw it in if I needed to. I also run it based upon percentages in my portfolio. So I allocate right now, I have 25% allocated towards swing trading, and that's basically the money that you see sitting liquid right now. I haven't taken any swing trades because I don't really have a good strategy right now for investing into swing trades or doing a lot of swing trading. So I've been just letting it sit liquid. That way I can buy stocks when they start to drop based upon the percentages that my portfolio have. And I do plan on actually making a season video where I talk about this more or less. On my stash account, been throwing basically since January, I've been throwing all my money into Park My Cash, which is a basically a short-term bond fund. So it really doesn't fluctuate a whole lot. I think over the last 5 years, I think it's went from about $100 to $102, and it fluctuates in that range right there. So it's very, very, very solid. And that's where I've been putting my money, just trying to grab the dividend that I get paid from there and then reinvest it back into there for right now. And with that account, I'm going to leave it set at 25% either until we get a return back on this correction, so we break the high, or if it comes into next year, January, then I'll reassess the strategy and make the changes necessary. Also, same thing with Acorns. Acorns in March, late March, I made the switch from a moderately aggressive, so 25% invested into bonds to 40% invested into bonds. And I've just been letting it run, letting it do its thing, making those regular deposits, dollar cost averaging, making sure that I buy the stocks when I need to buy them, and so on and so forth. So for instance, like last week, my delicious dividends, what I've been doing on there is I have it set at 25%, and when the market pulls back, so for instance, it was sitting at 24% when I made my 2 bi-weekly deposit, and so instead of buying Park My Cash, I bought delicious dividends. That's the way that I run every single one of my portfolios. The nice thing about Stash, Acorns, or M1 Finance is that you can buy fractional shares, whereas Robinhood, the reason why I have so much in buying power right now is because a lot of my stocks haven't dropped far enough for me able to purchase them. So for instance, this share right here is $49. I hold some of this. I only hold one share. Right now I could invest another $30 in there. However, a share is $50, so I got $30 basically sitting liquid for it to drop another 20 before I can reinvest. You know what I mean? So it's a long process. But for me, I think more importantly, I've been holding a lot of my cash either in safer type of investments, bonds, or just holding it liquid, waiting for the market to return or waiting for those percentages to drop so I can start buying more at that specific price. Anyways, guys, I would love to know what your plan is if you expect a 30% pullback. For me, I just knew that there was going to be some level of a correction this year. That's typically what we've seen in the last, gosh, who knows how long. Every about 8 to 10 years, there seems to be a pullback correction, and this year, I think is the year for that to happen. That's my personal opinion, so that's what I'm acting on. However, maybe you feel like this is going to be a great bull run going from here on out. I don't know, but I would go ahead and suggest to do your own research, and then based upon the research that you do, make the best decision possible to make your investments grow. Anyways, guys, it has been real. Thank you for watching. Feel free to join me on the live stream where I give away half an ounce of silver for the person who has the most K coin, and I'm doing actually that tonight as well. But anyways, guys, thank you for watching. I really appreciate it.